So, China is no longer set to replace the US as the world's largest economy, and it may just surpass the US for a brief period of time during the mid 2040s before falling behind, as per a report by Bloomberg Economics. And just a couple of months ago, Goldman Sachs came out with a report saying that China will become the largest economy in 2075 with an estimated GDP of $57 trillion. So, what happened in just a few months? Why are we learning about the current situation of China as opposed to what we had learned earlier and made a perception of China becoming the largest economy, surpassing the US in the next decade or so?
China reports its slowest growth rate for nearly 3 decades.
The trade war with America.
What does it mean for the rest of the world?
China has been the economic miracle of recent decades, but is it running out of steam?
China's once mighty economy appears to be hitting a rough patch now, with concerns rising about its future trajectory.
So, here's what has happened in China. China's once largest real estate company, Country Garden Holdings, which generated a revenue of $81 billion or 44 billion yuan in 2021, came this close to defaulting on its debt payments of $22 million, and that too with a grace period of 30 days. Now, this was the largest real estate company in China and 4 times as big as Evergrande. Evergrande has filed for bankruptcy protection in the US. Now, Country Garden Holdings posted a loss of 6.7 billion yuan in the first half of 2023. However, they did roughly a net profit of 26.8 billion yuan in 2021. So what happened in these 2 years, and why is the real estate market in China struggling? Before we move on to that, let us understand the dependence of Chinese economy on the real estate sector. So real estate in China contributes to about 30% to the total GDP. To put things into perspective, real estate in the US accounts for about 17% of the total GDP, whereas in Japan, it's about 12%. So you see, real estate in China almost contributes 2 times as much as the contribution of real estate in the US and about 2.5 times that in Japan. There's a lack of demand for homes in China, and that is why the home sales have been shrinking in the country. And this is why companies like Country Garden Holdings as well as Evergrande have been struggling to make sales in China. Not only that, China also has the highest number of vacancy in the world, with about 22% or 65 million vacant homes or empty homes in the country. On the other hand, home ownership in China is about 90%, whereas 20% of the homeowners own multiple homes, which clearly means that people in China believe in the concept of owning houses or considering investment in real estate. Also, it is worth noting that real estate in China, for the most part, follows a pre-sale system. Almost 85% of the total homes are sold through pre-sales, which means that developers get money or capital to build those homes or houses beforehand, and also that consumers or homeowners, they have to start making mortgage payments months or even years before they receive their finished houses or homes. So this is what happened in Shanghai. Homeowners, they started to threaten to not pay mortgages on their homes because they were facing a delay in being handed over their properties by the developers. Also, property sales in China have declined by 33% year on year in the month of July. Now that we've learned about the real estate crisis in China, it is also important for us to understand that China is not just facing a real estate crisis, but 2 other important issues as well, namely deflation and youth unemployment. While the world is facing inflation issues, China, on the other hand, is facing deflation. Now, before we move ahead, it is important for us to understand these 2 terms. What are these 2 terms? Inflation. Let's start with inflation. Inflation means the rise in prices of goods and services over a period of time. Let's say you wanted to buy a car in 2022 and the price of that car was $20,000 and the rate of inflation on that particular car was 5%. So the price of that car this year in 2023 will be $21,000. The rate of inflation calculated at 5% would result in a $1,000 increase in the price of commodity this year. So the same car that was available last year for $20,000 is now available in the market for $21,000. This is what inflation means. There are a number of countries in the world that are facing high rates of inflation, Argentina and Turkey being 2 of them. Now, the rate of inflation in Argentina is about 114%, which is the 3rd highest in the world. This simply means that whatever you bought in Argentina last year is now available at double the price this year, even more than double the price this year. On the other hand, the rate of inflation in Turkey is about 38%, which is also one of the highest in the world. On the other hand, deflation means a fall in price of goods and services over a period of time. And this is exactly what China is going through. The prices of goods and services in China are declining. But wait a minute, isn't deflation or a fall in price of goods and services good for the economy? If that is what the exact opposite of inflation means. You see, when you look at things from a national or a macroeconomic perspective, deflation is not good for a country. You see, deflation hits the economy when consumers are not willing to spend money to purchase goods and services. And this is what is happening in China. Consumers in China or citizens of China, they are not ready to purchase goods and services, which in turn is leading to a lack of demand of goods and services. Now, when there is a lack of demand of goods and services, the prices of those goods and services are bound to go down. And as they go down, the supply or production of those goods and services also goes down, which means that the country is now not producing as much as they were producing earlier. In other words, it simply means that the growth rate of a country is slowing down, or it has flatlined, or even worse, it has become negative. In China's case, the economy grew at about 6.3% annual pace in the second quarter of 2023, which is lower than what was expected by growth analysts, as they predicted that China would be growing at about 7% in the second quarter of 2023. Now, this leads to the third problem that China is currently facing, which is youth unemployment. According to reports, the youth unemployment rate in China in the month of June came out to be 21.3%. Now, youth in China, this report specifically accounts for the working population between the ages of 16 to 24. If more than 20% of the population of China is not able to find work, this creates a bigger problem. Now, it is also important to note that China is facing a problem of aging population. Not only that, now, China's aging population is competing with the youth population, which is willing to work by taking a pay cut. So there's a competition between the aging population and the youth population to get a job in China. It is also worth noting that as China is facing this aging population, the demand for new homes or real estate in China is supposedly going to go down. As China's population is growing old, it is also important to note that the population is declining and it is expected to decline from here on. So the demand for real estate in China may not be as high as it once was. And this could be a huge problem, not just for China, but for the world as a whole. So how does the Chinese economic crisis affect the world? China is the second largest economy in the world. Not only that, it is the largest exporter as well as the second largest importer in the world, which means that China exports everywhere in the world, and everyone who's importing from China is going to have a tough time if the situation is not taken care of. Why? Because with this problem of deflation that the country is facing, as mentioned earlier, there's a lack of supply or production in the country, which in turn means the exports that China will produce lead to a decline in the number of exports of the country, as well as number of imports, since there's a lot of unemployment that the country is currently facing. And this is why countries will be affected depending on how much they've been importing from China. Now, US President recently described China as a ticking time bomb because of the economic issues that the country is facing. Not only that, he further added that they've got problems and that it is not good because when bad folks have problems, they do bad things. So if China is not able to resolve its deflation, real estate, as well as unemployment issues, the world may face bigger issues. So, what are your thoughts? Do you think that China still will be able to surpass the US as the largest economy in the world, or will China's growth slow down because of the current crisis that the country is going through? Let me know in the comments below. If you enjoyed watching this video, please like and share this video with your friends and family. And also, do not forget to subscribe to our YouTube channel. Thanks for watching and have a good day.